These are seemingly unprecedented times. We're told this often. You've said that you won't tap government money to help you get through this. Was that an easy decision, an obvious decision for BP?
Anna, good morning, and thanks for having us. We're very focused at the moment on three main things, and the first is protecting the health of our staff, particularly those on the front line who are providing the services that keep the energy flowing and providing the retail services, the fuels and the products that people need. So we're doing a lot of work on that, both their physical health, I would add, and their mental health. Secondly, supporting the communities where we work. It's a very difficult time for the world. And we're very focused as a large company on helping because our people want to help and we want to help. And then thirdly, we're very focused on strengthening our finances and controlling the things that we control, capital, cost, making sure that we're shoring up our liquidity, strengthening that balance sheet, and importantly, driving that break even down of our business.
And with that in mind, was it an easy decision to decide to not tap any government sources of funding? What's driven that, Bernard? Why decide not to take any of the help that might be available?
Well, I think if we think about it in terms of the actions that, like the government here in the UK has taken to strengthen and protect jobs, which I think was an early move, a quick and decisive move, which I think will have a huge impact in a positive way. We have taken a decision here to not make any staff redundant for COVID purposes for 3 months. And we've also taken a decision that we will, for example, not furlough workers. We believe that a scheme like that is not intended for a company like BP. There are far more companies who are in a much worse off situation than we are. And we're very focused on taking care of ourselves, taking care of our own finances. There are many levers that we have in our hand. We're going to take capital down by 25% this year, maybe another 1 to 2 billion next year. We're taking $2.5 billion out of our cost base by the end of next year. And we think, Anna, we can get our business to a break even of less than $35 a barrel next year. So it really is about controlling the things that we can control and leaving some of those facilities for the people who need them more.
So you can get to a break even of less than $35. What's going to be the crucial lever you want to pull then to get you down to those kind of break even prices?
Yeah, it's a great question. I mean, our break even in 2019 was around $56. So going to 35 by next year, I think, is the right thing to do, and we'll drive it lower if we can. The economic uncertainty here, I think, is immense on how this recovery is going to play out over the coming months. But we're very focused on the basics of the business, Anna, and capital is obviously a huge lever for us. Planning to spend around $15 billion. We'll take that down to 11.5. We'll take $1 billion out of our lower 48 business, for example, defer some exploration and appraisal spend, defer some retail growth projects, things that we can control. And then on our cost base, we're big believers in the digital agenda, have been for quite some time. So we've invested heavily. We'll invest further, but we believe we can take more out of automation and digitization. And then also on agile, in terms of how we work as a team, we want to become much more integrated, much more agile, much more focused. And we announced on the 12th of February that we would reinvent BP. And that's what this is about. And therefore, we think we can take, at a minimum, I think, $2.5 million out of our cost base by the end of next year. So they're the types of things that we have in mind.
And I want to ask you about that energy transition in just a moment, but we sit here with oil prices having just turned negative last week. And I know you like to focus on the things that as a management team you can control, and that's completely understandable. And maybe the oil price is not one of those. But with oil prices as volatile as they are, does something need to be done to look at the structure of the market, the role of ETFs, for example, to try and give a little more predictability, or is that something you're not thinking about at this point?
And I think we've all given up trying to predict the price of oil. I think we learned that early in our careers, and we certainly don't control it. And of course, we've got gas prices as well and refining margins. But what's happening here in the market, there's a lot of commentary about some of the things that you've talked about. what's happening in the market is a basic supply and demand issue. We're in a world where we expect demand in the second quarter to be down in the world around 16 million barrels a day. Now that's 5 times the previous record for demand destruction. That's the type of destruction that we are seeing, and that was in 2008, 2009 in the financial crisis. And at the same time, we have supply coming into market with the OPEC Plus agreement not coming into effect really until the beginning of May, and the effects of the G20s. So we have a situation where we have excess supply. Inventories and storage are filling up. Cushing is 70% full. People think will reach completely full sometime in May. And we're very fortunate to have a very large trading organization and have been able to find a home for our crude, a physical home for our crude. But not everyone is that fortunate. So what's happening here is a very simple case of supply and demand, and the market really isn't going to find some stability until that comes back into balance.
And with that focus on storage, Bernard, you say you're managing with that for your own crude, but will you have to shut in any production? Have you been approached in any OPEC countries, for example, to cut back on production?
Yeah, it's a great question, and we are seeing the early stages of the OPEC countries getting ready to meet their quotas. We're seeing that obviously in the Middle East. We're seeing it in Angola. We're seeing it in Azerbaijan. We are seeing some countries curtail their domestic gas requirements. So we are beginning to see the impact of the decisions of the OPEC Plus for sure.
In terms of the things you can control, then dividends is clearly one of those, one of the levers you can pull. You've made an announcement around the dividend today. If oil prices stay around where they are, or indeed in the low tens, what visibility do you have on dividends? What ability to maintain the dividend, Bernard?
Well, the board of BP makes the decision around the dividend, and it makes it every quarter. And as we look at the decision that we've just taken around the first quarter decision, the board's been meeting weekly, Anna, actually since the start of this pandemic. And as at the end of every quarter, it reviewed the dividend decision, and it reviewed it in full. And it made a decision to pay the dividend on the basis of the underlying performance of the business and the actions that we are taking, and the actions that we're taking around shoring up our liquidity, strengthening that balance sheet with the divestment program, and driving that break even down. And as outlook for the future, the board will make the decisions quarter by quarter, as they always have.
Is there any consideration of a scrip dividend? Is that on the table when you talk about these things?
Yeah, it's a scrip dividend is one of the many tools in the toolbox. I think the yields right now on stocks like ours are quite high. So it's a tool, but not one that we choose to use at the moment.
Let me just finally ask you about that energy transition. It's clearly something that you believe a lot in, and you've put a lot of effort in, and you thought maybe your early years in charge of BP might have been dominated by that, and instead we're dealing with COVID-19 and the fallout from it. Is the energy transition project at BP on hold because of COVID-19, or can it push forward?
Well, it's certainly not on hold, and we remain as committed, and I think I've said recently even more committed to the energy transition. And I say that, Anna, for 3 very simple reasons. Number one, I think the pandemic only adds to the challenge for oil in the future. We're all living differently, we're working differently, virtually, we're not traveling. And there's a real possibility that some of those work and life patterns will change for good, and therefore the question of will consumers consume less. So I think that's the first thing around the pandemic and the effect in the medium to longer term oil markets. The second is that I think the pandemic has reminded us of the frailty of the ecosystem that we live in, and I think people are much more conscious of how exposed we are, how life can change overnight, really, in this circumstance. And obviously looking around at clean skies and clean air. And I think that desire will continue around climate as we head into the future. And then finally, as you talked about, WTI negative prices in Texas and US last week. At the same time as that was happening, Lightsource BP, where we own 50% of, was letting 400 megawatt of solar contracts in the United States over that same period. So I think it speaks to the resilience and the attractiveness of that sector. So there's some of the reasons why I think it's really important that we stick with our purpose of reimagining energy and our plan to reinvent BP.